Today we are going to look at the situation with Bitcoin, which has once again changed direction upwards on the daily candles. That is, before this it was looking downwards. I remember my promise to review a US stock market share. It will be JP Morgan Chase. The review will be released right after the Bitcoin one in about 2 hours. At the same time today we will do an unusual review of Bitcoin. I have deleted all the markings and we will look at it with a clean slate, first at the monthly candles where the situation is one way, then at the weekly ones where it is different and a completely different situation on the daily candles. I will show all of this. Before us are the monthly Bitcoin candles. What do we see? We see that Bitcoin in October, right here in October 2025, set an all-time high in the area of $126,000, after which it began a multi-month decline that ended in February right here in the area of 60,000. Then there were 3 months of growth. Yes, there was growth in May because we hit a 4-month high, but the June candle marked an engulfing of those 3 months of growth and closed firstly below the 50-month moving average, which is green, and below the important support level of $58,974. What can we say? That according to Elliott wave analysis, presumably we had the first wave of the decline, then there was a correction wave, and now we are expecting another wave of decline, a correction wave, and another wave of decline. And how does it happen that we are growing within the framework of a decline? And everything is fine. Why? Because it is not forbidden to grow. Where can we grow to? We can grow, firstly, to the level of the upper boundary of the flat that lasted for many months in 2024, which is $71,280. Notice how, as soon as this boundary was broken, Bitcoin went on to update its all-time highs. And secondly, we can grow to the area of the June candle's opening point, that is $73,674. That is to say, in this case, it does not cancel the downward trend. It will simply be a movement and a test, yes, of the seller's strength before going lower. But if Bitcoin closes with an engulfment of the June bearish candle, then we have the right to talk about a movement significantly higher. And the nearest target level in this case would be right here at $82,550. That is all. Here we have understood that Bitcoin is globally looking downwards, but it is not forbidden to go to the area of 71,280, 73,670, and if necessary, even 82,000. Now we delete everything, the kitty is meowing, and we switch to the weekly candles. What do we see here? The interesting picture here is this. A breakout of the 50-week moving average without a retest, a breakout of the 100-week moving average without a retest, and a breakout of the 200-week moving average above the higher lying averages. Accordingly, such situations do happen, but they usually end with a retest of the nearest moving average from above. And the nearest moving average from above is the 50-week one, which is running in the area of $81,000. We cannot say right now that Bitcoin will go that high, but the nearest technical level is the huge drop candle from that same June. It opened on June 1st, which is $73,674. That is, in principle, technically we can go there without breaking the global downtrend. At the same time, the 50-week moving average could just pull up into this area in a few weeks. But can we, in principle, count on growth based on the weekly candles? Both yes and no. On one hand, right here, the candle from June 29th engulfed the large bearish candle, closed above the 200-week moving average, and subsequently, all the following candles traded above the 200-week average, except for last week, which broke below the 200-week average. And it would seem that this points to a decline, just as this red candle, which engulfed 3 weeks of growth in one move, also points to a decline. But there is a nuance. Every week starting from June 1st has tested the 200-week moving average with either its lower shadow, upper shadow, or body. Formally, this is a sideways trend passing through the 200-week moving average like a skewer through meat, and this means that we have an equal probability of breaking out either upwards to the area of $73,500 or downwards to the area of the 300-week average, which is somewhere around $55,500 or even lower. Let's figure out where we have a chance to go now looking at the daily candles. On the daily candles, we see the beginning of a major drop. This wasn't the all-time high, around January of this year from the level of $98,000. It stopped in February, and after that, look at what we are doing. We are testing the 50-day, then the 100-day, then the 200-day moving averages, after which follows a pullback and a retest, so to speak, of the 50-day and 100-day, with a break of the low once and a break of the yearly low twice. At the same time, a bullish divergence is forming, meaning the lows are getting lower while the RSI lows are rising, and it has started to play out. A full play out of the divergence means entering the opposite area on the RSI, that is a value of 70 or at the very least 50. We have already hit 50, but we haven't hit 70. But nevertheless, the RSI has consolidated above the 50 level again, and that inspires optimism. Just as the yesterday's close inspires optimism, which is how I started the video, the daily candle, which note engulfed several days of decline, specifically 3 days of decline. Here is the decline on Friday. It updated the local low. Here is Thursday, and here is Tuesday. That is, these 3 bearish candles, which successively updated the lows, were engulfed by one bullish candle. This speaks in favor of growth. At the same time, the growth may continue after testing the 50-day moving average, which is also the midpoint of yesterday's candle, somewhere around $63,750 to $63,800. If we see a close below the 50-day moving average again, that's where I would wait before opening long positions. Whether to open them now is up to you. I, for one, maintain that technically Bitcoin is currently looking upwards towards the 100-day moving average, which is at $66,000. It is declining. Right now it is slightly higher. If we break through this average, then we head towards the 200-day one, which is at 69,000. Then if we break through that, then we look for some technical level. Now let's do some charting, after first deleting all my drawings. So what is our key level? The first key level is this one here. After the big drop, the rebound stopped here, $66,328. Notice that we tested it with a false breakout to the upside. Let me widen this view. There was a false breakout and then we went down, but for now the 50-day moving average is still holding us with some breakouts, but still holding, right? So only if we see Bitcoin consolidate on the daily candles above 66,329 do we have the right to talk about a more or less serious growth, well, at least towards the $69,000 area. Well, and potentially even higher, yes, 73.5 is what we're seeing on the monthly candles. Let's mark some more levels. Which other one is important? So we had a rise, then a pullback. And pay attention to this point. We approached this level, but every low, starting from, well, I'll zoom in even more now, starting even from here, higher, 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 higher. That is, the lows are rising. This indicates buyer strength. At the same time, you can't say that the highs are clearly declining. They are more in some kind of horizontal plane. Although starting from this moment, one could still assume they are declining. But overall, the big picture here and now points towards growth, at least to the area of $66,328 and potentially even higher to the area of $69,000. If we break through this level, then we look at the chart markings, and what do we see based on these markings? Well, we see the starting point of the drop here, then we can also mark another one right here. So the technical targets are $71,400, $73,500, which in principle is what we were getting on the monthly candles. I'll just remind you that I conduct this review analysis and my trading on the Quant Fury platform. The QR code is on your screen. Here you can trade thousands of financial instruments from the stock market to cryptocurrencies, forex, commodities markets, and so on. And all this with zero commissions, without any additional fees. Subscribe to the channel, leave your comments on what you think about Bitcoin, and we are expecting the next review on JP Morgan Chase later today. Goodbye.